And what if everything you thought you knew about artificial intelligence is backwards? Because while everyone's been fixated on American tech giants like NVIDIA and OpenAI, quietly, another AI superpower is accelerating in the background, and few in the West are paying attention. Here's a question for you. Do you think China can surpass the US in AI leadership within the next 10 years? Yes or no? Type your answer below. I want to see where you stand. Well, here's the controversial piece. Since late 2021, we've tracked companies like NVIDIA and Palantir at Epoch Report. NVIDIA surged 10x. Palantir grew 4x. Those who followed closely captured a huge portion of the early AI boom. But here's the catch. That train may have already left the station for US tech stocks, at least. Valuations are through the roof. Forward returns may be modest, not massive. Yet our research points to a second wave, a market that hasn't yet exploded. And it's not in Silicon Valley, it's in China. In August 2024, China's State Council released its AI Plus Strategic Action Plan. Little media coverage, little Western analysis. But what's in that document could be the spark for an AI boom 10 times larger than even China's previous internet revolution. And 99% of investors is completely missing it. So today, I'm bringing over 30 years of investment perspective to the table to break it all down. By the end of this analysis, you won't just understand where the next AI frontier lies, you'll know exactly what to look for. Stick with us, because here's what we're unpacking. Why AI is the engine of the next global economic cycle. How China's AI sector could outpace expectations, and why the US advantage isn't as absolute as it seems. And most critically, where the actual investment opportunities lie. Let's begin from the top, from the macro cycle shaping this timing. History's playbook, technological cycles, and the birth of AI. Let's zoom out. There's a theory in macroeconomics called the Kondrativ wave, also known as the long wave cycle. It suggests that every 50 to 60 years, global economies undergo a major reset, expansion, stagnation, depression, and recovery, driving each cycle. A technological revolution. Steam power drove the first wave, bringing textiles and railroads. Electricity powered the second, pushing chemicals and automobiles. The information age defined the last cycle with PCs, the internet, and mobile networks lifting productivity in markets globally. Companies like Microsoft and Intel experienced years of compounding growth during this era. But even giants have their limits. Eventually, the gains from one technology level off. Innovation plateaus. Markets turn defensive. That's where we are now. The digital advantages of the past are mostly absorbed. Globalization is slowing. The debt load in economies like the US has hit unsustainable levels. Quantitative easing can't just restart the engine the way it did in 2008. But just as one engine stalls, another begins roaring to life. Enter AI. This isn't just another productivity tool. Artificial intelligence might be the first true extension of human intelligence. Where past revolutions expanded muscle or information access, AI extends our ability to reason, predict, and create. It's the dawn of mass personalization. Imagine a supply chain that creates 1 million unique products for 1 million unique customers at less cost than mass-produced goods today. The impact on productivity, exponential. This is why we urge you to look at AI through the lens of decades, not daily headlines. Short-term volatility means little when standing on the threshold of a multi-decade shift. But that brings us to the next big question. If AI is global, why is Epoch Report now focusing so heavily on China? China vs. America. The real map behind the AI rivalry. Let's tackle an uncomfortable assumption head-on. Many believe the US has already won the AI race. After all, NVIDIA's chips are essential for high-performance AI. OpenAI's ChatGPT leads the world in language modeling. China is blocked from acquiring advanced chips due to US export restrictions. At first glance, that analysis holds merit. The US currently leads in foundational chip design and base-level architecture. Think of it this way. America created the most powerful engine in the race. But way to eye is not just about engines. You also need roads, drivers, traffic, and a market to drive through. It's China's advantage. Imagine AI as a global Formula One championship. America may have built the fastest car, but China built the biggest, most complex racetrack. It has 1.4 billion people across one of the most digitally integrated economies on Earth. More data, more use cases, more verticals, more feedback loops. Let's compare. Mobile payments. China processes over $80 trillion USD in mobile transactions annually. The US, around $750 billion. That's a 94-fold difference in scale. Commerce. China's platform penetration sits well over 40% of global market share, compared to the US at just 16%. Ride-sharing. China's DAT has 156 million active users versus Uber's 98 million worldwide. These numbers don't just show market size, they reflect data abundance. AI runs on data like cars run on fuel, and China has oceans of it. And here's the part Western watchers often underestimate. China combines this digital infrastructure with top-down industrial policy coordination. In August 2024, the central government released its AI Plus development agenda. This isn't PR, it's policy mobilization. And if you question whether centralized action can drive outcomes, remember this. Just 2 decades ago, China had no high-speed rail. Today, it owns the world's largest, most advanced network. The same model can and very likely will be applied to AI tech containment and the comeback strategy. Let's address the elephant in the room. Can China really build competitive AI if it's blocked from accessing top-tier chips? Our analysis? Not only is it possible, it may accelerate their domestic innovation. Case in point, Cambrian Technologies, often called China's answer to NVIDIA, in less than 2 years. Its stock surged from under 100 yuan to over 1,500 yuan, a 15x gain. The driver? Necessity. Sanctions forced Chinese firms to stop relying on outside suppliers and build in-house. That shift is pushing thousands of engineers, tens of billions in capital, and enormous political will into one goal: semiconductor independence. While it may take time to catch up in design, China's manufacturing scale, state support, and massive data advantage give it a path to long-term competitiveness. Now let's move from geopolitics to opportunity, the 4 AI megawaves. Where to find the next 10x play at Epoch Report? We break the AI investment thesis into 4 interlinked waves. These aren't isolated moves, they build on and amplify each other. Wave 1. Hardware without compute power? Nothing in AI works. In the US, NVIDIA leads. But in China, think Cambrian, Inspur, Lenovo, H3C, Huawei, all playing in servers, storage, networking. Even niche sectors like AI server cooling or custom chipsets are growing. Companies like Bitmine, Cryptographic AI, or HiBlue, Thermaltech, are carving space. Yes, hardware is high risk, but also high reward. Suitable for those who trust long-term Chinese tech development. Wave 2. Software, this means the brains of a large language models. Palantir is a Western example. In China, look at Baidu's ErnieBot, Alibaba's Qianwen, ByteDance's Doubao, or DeepSeek. Here's the unique angle. These models are built for and trained in Chinese language, data, and culture. This makes them locally superior for most enterprise applications. Wave 3. Applications, this is where big returns can emerge because this is where AI meets real-world problems. It's manufacturing. Use of AI can improve production efficiency by 30% or more. Autonomous driving. LiDAR leader HiSiTech is gaining footing in domestic markets. Healthcare. Drug discovery firms like Wuxi AppTech and Ping Good Doctor are applying AI to reduce time and cost in R and DI education and finance. AI is driving personalized learning, fraud prevention, and robo-advisory services. Simply put, this wave is massive and we're still early. Wave 4. Energy infrastructure. AI eats energy. Training GPT-4 level models can consume the power equivalent of a small city over several months. That creates a hidden boom in clean energy. China already leads the world in renewable capacity: solar, wind, and hydro. Wind power player Goldwind is one such example, capitalizing on AI-driven energy demand. This final wave, it's the most predictable. The logic is simple. More AI equals more power, needs equals energy tech growth. The moment of decision. Where do we stand? So what do we take from all this? Let's break it down. The West leads in foundational AI tech. China dominates in data, scale, and deployment speed. The US shines in original innovation, 0 to 1. China excels at scaling innovation, one too many. From an investor's perspective, this means opportunity in both regions. But don't ignore the untapped tier. China's emerging AI ecosystem. The game isn't over. It's barely begun. And let me repeat something critical. Don't wait until Wall Street confirms the trend. By then, the gains are already absorbed. The smart money enters before the crowd. That's why now is the moment to map out your exposure. If you're still watching, you're not here for surface-level hype. Make sure you click to follow our channel and turn on notifications. At Epoch Report, we deliver analysis that peels back the layers others ignore. And in just 10 minutes a day, you can stay ahead of the events shaping your financial future. One final question, I want to hear what you think. Is China's AI wave a sleeping giant, or is the Western advantage just too far ahead? Let us know in the comments. I read every one, because here's the truth. The worst mistake in investing isn't choosing the wrong stock. It's missing the opportunity altogether. Missing that moment when a new cycle begins. Missing the early conviction, the asymmetric return period, the compounding potential. Every time in history when technology reshaped the world from steam to electricity to internet, those who moved early won big. This could be our moment again. So, if what we shared today gave you insight, don't just like, subscribe, and hit that bell. Timing matters more than ever in this cycle, because opportunity doesn't knock twice, but it does reward the prepared. We're Epoch Report, and we'll see you in the next video.